a great pleasure being here. And what I'll do is, what I'll be sharing with you is basically three main topics. Why sustainable development is so important today, and why sustainable development is so important for airport cities. And then the second point, it will be about airport cities and the key drivers for airport cities. And then the last one, it will be about PPPs. And I like to say that PPPs is like getting married. And it's very easy to get married. It's very hard to stay married. And so the challenge of PPP is about staying married for 30 years. And so the whole thing, I would say the key word is trust. If we trust each other, then we want to get married with someone for 30 years. If we don't trust, we do not want to get married. So how do we build trust? I think that's the main point. And so the main point will be about understanding what is development. And the main point is PPPs are not an end in itself. The point is not to create a PPP unit. The point is to improve quality of life for people. And so we are going to use PPPs to improve quality of life and to protect the planet. And on the meantime, because we need private capital, we need to make it a business. But the end goal is to improve quality of life. And so I would say that we are talking about infrastructure project finance. But what we're really talking about is public investment. And we are inviting the private sector to be involved on public investment. And so public investment is power. And so how are we going to give power away to the private sector, and how are we going to manage power? Because if we just give the power away to the private sector, then the whole thing goes to the private sector. And then we cannot guarantee that we are going to provide quality of life for the people. So the point is to, yes, we want the private sector to come in, but yes, we want to manage the power of the public service. And so the key question is managing the power of public services. And so and that's what sustainable development is about. Just like every marriage, we cannot say what is the DNA of getting married, because every couple has its own DNA. Every PPP project has its own DNA. It will always be different from case to case. A PPP in Accra is one thing, a PPP in Beijing is another thing, in Lisbon is another thing. And so we have to understand the local context for PPPs. One example, we have now raised 120 case studies under the United Nations for PPPs, and one case study is in South Sudan for PPPs in health. And in this case, the PPP involves a non-profit organization. Okay, so what we have is to believe that there is a lot of creativity beyond the types of PPPs that we are now creating. So we'll be talking about bottom-up solutions, we'll be talking about infragap, and we'll be especially talking about the role of institutions. What is the role that institutions will play to make PPPs go live and to remain well, to be healthy, and to provide good public service? And at the end, we'll be talking about the roundtable approach, which, again, I've been involved in 90 PPPs all over the world, and I think the roundtable approach is one approach that can help PPPs to improve. So Basically what we have is, on one hand, we have countries, we have cities, and we have projects. And on the other hand, we have a lot of liquidity. We have too much liquidity in the market today. And actually, liquidity and capital want to meet projects, and projects want to meet capital. And how are we going to create the bridge? And so, the point today, what we're trying to do at the UN, is to be the pillar that allows the bridge and for people to speak with each other. And so, on one hand, we have vision and strategy, public vision, public strategy. On the other hand, we have capital, we have dynamics, and we have innovation. And how are we going to mix these two? I think it's important to go back in time. And when we go back in time, we see that actually development accelerated after the Industrial Revolution. And after the Industrial Revolution, so basically a couple centuries ago, development was associated with economic growth. And then we have realized that development cannot just be economic growth. We had to bring in social cohesion. And so having economic growth but not having social cohesion was not working. And so we had to bring in social cohesion. And then we have realized that the planet is also not able to give all we need from the planet. I mean, the planet will always live, but we have to respect the planet. And so we came up from a people, planet, and prosperity perspective. And along with this perspective, what we have and what we see is that development has allowed us to grow in terms of population. Hans Rosling defined the world PIN code, and the world PIN code in 2010 is 1114. And 1114 means 1 billion people in Europe, 1 billion people in the Americas, 1 billion people in Africa, and 4 billion people in Asia. And this was in 2010. In 2050, Africa is going to go from 1 to 2, and Asia is going to go from 4 to 5. And in 2100, Africa is going from 2 to 4, and Asia is going to remain at 5. And so the reason why we see so much traffic happening in Asia, it's because the population is in Asia. But actually the population will be in Africa. And it's in Africa that things are growing the most and the fastest. And so we have to understand where is people going, raising, and where is development taking place. And so how are we going to face this challenge, this demographic challenge? Sustainable development is about not compromising the future of the next generations. And so basically ensuring that our kids and our grandchildren will have the planet and it will have jobs. And so again, we go back to this people, planet, and prosperity. When I'm now lecturing in École des Ponts in Paris, and I was just giving the example. You know, President Macron, when he raised the taxes on environment, basically he was saying, we have good social environment in France, and so we can raise the environment, we can raise the planet angle, because this is what we need. And what happened? He has now the gilets jaunes, he has now the yellow jackets on the street. Why? Because the people on the street are saying we are not happy yet. And so we have always to balance people and planet. And if we don't balance people and planet, things will get out of hand. So the challenge today is how are we going to ensure development, making sure that what we are doing, we are taking good decisions for the people and at the same time taking good decisions for the planet. Ban Ki-moon launched the SDGs, the Sustainable Development Goals, and the Sustainable Development Goals is, in one very simple way, leaving no one behind. And so leaving no one behind is about thinking about everybody that lives around us. And so what are we going to do? What happens is we are going to mix people, planet, and prosperity, but the question now is, how are we going to implement it? And what is interesting is that the first 10 is about people, from 10 to 15 is about planet, and then the 16 is about institutions, and as we'll see, institutions are the rules of the game, and then 17 is about partnerships. And why is partnerships? Because today, for the UN, it's clear that to achieve the Sustainable Development Goals, we need $2.5 trillion per year of investment. And there's no public government capacity to put out 2.5 trillion. And so we need the private sector to come in. And so actually what the SDGs represent is two main messages. First, the private sector is formally invited to participate on development models. It's not one country saying, it's 193 countries that have approved the SDGs. And so partnerships is the way to achieve the SDGs. It's not for Angola, where I'm from, it's not for Norway, it's not for China, it's for everybody. Everybody says we need partnerships to achieve. And then, along with partnerships, is about strong institutions. And strong institutions, as Douglas North says, is about the rules of the game. And the rules of the game are not just the formal rules, like the formal institutions, it's the informal rules. And the informal rules are almost more important than the formal rules. So we have to understand the context. We cannot imagine that we are going to organize a PPP, again, in South Africa, in the same way we are going to organize a PPP in Brazil, or we are going to organize a PPP in India. All PPPs are going to be different because the rules of the game are different in every country. And we have to understand the context of every country, otherwise PPPs are not going to work. Because PPPs is about getting married, and we don't get married all the same way in different countries. And so what we do today, basically what we like to use is, again, the SDGs, the Sustainable Development Goal, which is the United Nations 2030 agenda, to invite everybody, nations, cities, to think, where do you want to be in 2030, okay? And basically, if we know where we want to be in 2030, the idea is, what are we going to do today to be there? And this is what we call the back to the present. And back to the present is, where are we today? So if we have a specific city, if we have a specific nation, where are we today? And that is the as is. And where do we want to be in 2030? And that's the vision, and that's the objective. And then the point is, what type of projects do we need to achieve and to be in 2030 the way we want? And this pipeline of projects is going to be the infrastructure investment plan. And it's very important that we realize that this infrastructure investment plan is going to have three different pockets. It's going to have a public sector pocket, it's going to have a private sector pocket, and it's going to have a public-private sector pocket. And this is the pocket we are talking about. And so we are not saying everything can be done through PPPs. Some things can be done through PPPs, but to choose where are we going to manage, where are we going to share the power of public investment with the private sector, it's very important. So not all projects can be done through PPPs, some projects can be done through PPPs, and it's very important that we realize this. And so let's go for cities now, and then from cities to cities and airports, before we enter into the PPP themselves. We like to say that a city is like a four-season pizza. And on the four-season pizza, we have the first season is about mobility solutions, where we have obviously airports. And so how do we go, how do we take people and cargo from A to B? And that's the mobility. Then we have the utilities, water, energy, gas, telecom. That will be the utilities. Then we'll have the social infrastructure, education, health, safety, justice. And then we'll have urban and regional development. And urban and regional development, that's where real estate is. And let's face it, this is where the money is. And so what is very important is that for us to develop a city, we have to have real estate allocated, mixed with urban development. And so whenever we'll be speaking about airports, and we'll be speaking about real estate, adding real estate to airport development. And that's what will make an airport city. And so it's very important this, because when we'll be talking about PPPs, and as the previous speaker was saying, we have to know where the money is coming from. So what are we really talking about? We are talking about understanding the infra gap. And understanding the infra gap, again, is understanding what people are asking for. And what do we need to offer people in terms of public service? And to offer quality of life, we are going to need infrastructure assets. And these infrastructure assets are going to require investment. If we know the needs, if we have the priority for the needs, we will have good projects that need to be developed, and because we have good projects that we need to be developed, the rate of success of creating investable projects rises very much. And the moment we have a need that is transformed into an investable project, and this investable project will bring in the capital providers. And so the moment we have a project that is investable, we will have equity coming in. And let's face it, the moment we have equity coming in, we will have debt coming in. Because basically debt follows equity. So for us, the main point is to understand the public needs, transform it into projects that are investable, bring in investors, and investors will bring in lenders. And this is the cascade that we have to bring in. And basically when we have this cascade organized, we'll have the basis for airports to grow, cities to grow, capital to be there. The question will be, what are cities looking for? And cities are being digital. And so we have to understand how is the digital city going to grow within what we are doing. And I would say the digital city happens on the normal city as it will happen in the airport city. The second point is cities want to get rid of CO2. And so cities are decarbonizing. And so all projects that decarbonize, all projects that are digital, people know this is the future and this is where people want to invest. And then people want to humanize the cities. We do not want cities for robots, we want cities for people. And so basically, if we look for stability, education, healthcare, infrastructure, culture and the environment, these are the cities that we are looking for. And so basically the whole point is to, if this is the cities we are looking for, this is the airport cities we are looking for. And so what happens and why is so magic the airport city? The magic is airports are business magnets. Airports make money. Airports are the best of the city itself. Airports are gold mines of real estate opportunities. And why is this? Basically because we will have all sorts of real estate puzzle happening around the city. And so the whole thing is about how are we going to organize this puzzle to improve the price of the city and therefore to improve the price of square meter. And how do we improve the price of the city? Because we have people as clients going to these cities. So the moment we create cities that are attractive, we attract people, and the moment we attract people, we raise the price of square meter and we raise the price of a city. And so the whole process is about creating cities where we want to live, create cities where we want to go, create cities that are mandatory for us to go through. What Posada tells us is that the same way we had seaports in the 18th century, we have railroads in the 19th century, we had highways in the 20th century, and we have airports on the 21st century. And so the whole thing about organizing a city, if it was around a port, today is about an airport. What is important is that airports create jobs, airports reduce time and costs, and they expand connectivity. The whole thing is, for us to do this, we need implementation, we need strong institutions, and again, we need a strong vision about what the city it will be in the future. Basically, we would be having, and we would be looking into the airport city, the airport corridor, and the number of clusters. This picture here is very important because we have to think at the PPP as a project, but we have to see that PPPs are projects under an umbrella of multiple projects. And it's very important that this umbrella is a public umbrella. And so it's very important that there is a government vision about what the city and the airport city will be. And under this umbrella, a number of different verticals will come down to give way for specific PPPs to be designed and implemented. And so I would say an airport city is an archipelago of PPP projects. What is also very important, and we'll have Whitman with us this afternoon, is that too many projects fail because the idea built and they will come does not pay off. And this is very important. So where are the clients? Where is the vision? How are we going to make sure that the whole thing fits in? Not many airports have the luxury to develop all real estate with their own financial means. And then again, what is very important here is how are we going to combine this public vision about what the city will be in the future and what is going to be done by the public sector and what is going to be done by public and private sector combined. Oops. So we are going to have always a mixture, I would say an orchestra, where we are going to have politicians with their vision, we are going to have the airport operators, we are going to have the users, and we are going to have the investors. And what we are really here talking about is how are we going to mix the whole thing together? And how are we going to create a coherent plan to make sure that everybody understands this? So let's talk about partnerships and strong institutions. So a private party and government entity providing a public asset or service for private party bears significant risk, and the remuneration is linked to the performance. And this would be the definition from World Bank. What is very interesting is that there's no one definition for the United Nations, one for the World Bank. Every government almost has their own definition. So I would say there is a cloud definition of public-private partnerships. Myself, I like very much the Canadian definition of PPP. And the Canadian definition of PPP, basically they take out everything that is design and build is not a PPP, and everything that is a privatization is not a PPP. But everything in the middle is a PPP. And so I would say by excluding what is not a PPP, it's much easier to define what a PPP is. And so, as the previous presenter was mentioning, we have PPPs where we only have operation and maintenance, build and finance, design and build, and then we have concession. This is very important because myself spend a lot of time in Africa, and obviously one key aspect today is the airport of Lagos or the airport of Nairobi. You know, these are the most important airports today in Africa, and it's very important for everybody that travels in Africa that the service of Lagos Airport or Nairobi Airport works well. And we know today that we do not really need to have a new airport, but we need these airports to improve dramatically in terms of efficiency. And this means that we are eventually talking about a operation and maintenance type of contract instead of already building a new greenfield project. It's one very good example is the airport in Botswana. In Namibia. Very nice airport, fairly small, but works very well. It's very important to understand today, for instance, in Africa, that considering the growth of population in Africa and considering the time for roads and railway to be developed in Africa, it's obvious that Africa is going to be an airport continent. But it's obviously that Africa is not going to be a $1 billion airport continent. It's going to be a 50 million airport continent. So we are going to have a lot of small airports, 50 million airports. And going back to a previous question, I would say it's very important to understand that the yield that we are talking about when we are talking about airport assets is going to decrease according to the risk mitigation. And so I would say that it would be, and it is very likely, that the first yields, the first PPP projects in new countries have yields and IRR above 15%, and as the PPP airport project grows, the IRR decreases. Because people will understand that actually their risk mitigation, their ways of improving investment management in these countries to decrease the IRR. But it's obvious that for certain countries, people are so willing to improve and to attract investment that they are going to allow IRR to be great. And this is basically what we can see the President Paul Kagame doing today in Rwanda. Paul Kagame in Rwanda, it's very simple. He has adopted a Singapore type of development where he wants airport to be one of the key drivers for Rwanda to develop. And he knows that if he develops an airport city, and if he manages to have one of the most important airports in Africa, is going to drive Rwanda to a growth much higher than, for instance, DRC sitting next door. So, There are basically three types of PPPs. The first type of PPP are economic PPPs, and I would say airports are one of the best economic PPPs. Airports, energy, oil and gas. Just by the way, and because we are very on a oil and gas area, that's my field. I'm a petroleum engineer, and actually the joint ventures between the state and oil and gas companies are the first examples of PPPs. People do not think about it, but actually when we see a concession given to a mining company or to an oil and gas company, we are talking about a PPP. So PPPs exist for over 100 years. It's just what we are now doing is bringing in the oil and gas experience to the infrastructure level. But oil and gas has done PPPs. So economic PPPs, the second type is social PPPs. And social PPPs, we are going to have schools, we are going to have hospitals. And the difference between economic PPP is that the asset generates revenue stream to pay for the investor. On the second one, the government has to pay the private sector for the school and for the hospital. The third level and the most complex level are urban PPPs. And urban PPPs involve mixed economic and social PPPs. When we are talking about an airport, we are talking about an economic PPP. When we are talking about an airport city, we are talking about a urban PPP. The most complex, the most efficient, very challenging. When we look into the business design, basically all types of PPPs will go around this type of business design, where we have the government, we'll have the project company, the EPC contractor and the operation and manager contractor, the users, and then the capital. And so what we are saying before is that basically, although the lenders will be putting money into the project company, the lenders at the end will always want to have a relationship with the government. And this is the guarantee the previous speaker was talking about. Then we'll have all sorts of variants from this design. PPP has been about value for money, and PPP has received a lot of people that has been saying that PPPs is just another way of making money. And UN has developed the concept of people first PPP. And the people first PPP is basically adding the value for money, adding the value for people. And so the whole point today is to say that, again, the same way a PPP, we are talking about what type of yield, what type of IRR are we talking when we have a PPP. The question now is, how many jobs are we creating? Local jobs when you create a PPP. What type of education are you going to create because you have a PPP? And this type of perspective of social PPP is basically keeping the economic and financial perspective within the PPP, but basically adding a social perspective to the PPP. And the same way, adding an environmental perspective to the PPP. So the same way the government used to say or could ask the private sector, how much capital are you putting in? What type of return are you expecting? Today, the point is to ask, what type of jobs are you creating? What type of ecological footprint are you creating when you develop your project? This is an example in DRC. This is an example in DRC. This is a border between in Katanga, between Lubumbashi, actually in Kasumbalesa, and Zambia, and in this border, we had a problem, and the whole point was, how are we going to improve transport sector between Congo and Zambia. And the whole thing, again, was if we would expect to change and create PPP legislation, to have a PPP project flying in, we would still be discussing the PPP project today. And so the point was, what type of basis do we have today to drive the PPP through? And what type of community needs do we have today to drive the PPP through? And the example here was very interesting because we had to involve the mining companies basically to serve as collateral, but basically what we managed was to, by creating this Karibu to sustainable development, and Karibu means welcome in Swahili, basically what we created was a company that by creating an infrastructure developed a solution for the border, but at the same time developed a solution for industry to be developed and created a logistics hub for agriculture to be developed in parallel. And so this is just an example on how, when we have a problem, we can transform the problem into a project and the project into a business, and to have the business presented to the private sector, and to have the private sector combining and aligning a strategy with the public sector to implement a solution. This is another example I was involved in, and in this case it was in '92, and in 92, 93, the picture above, it's 300 hectares, and it was a refinery, container terminal, and so on. And the whole thing was, in Portugal, they wanted to transform the whole city, and they wanted to transform very fast. And so you can see that 2 years later, the whole thing was cleared, and then 6 years later, we had a city there. For this, the example I wanted to share with you was that an explicit PPP was created. And the concept of an explicit PPP or institutional PPP is basically a company that was created between capital from the public sector and capital from the private sector. This institutional PPP has one very clear advantage. We spend a lot less with legal advisors, because basically when we have a problem between the public and the private sector, we discuss it at the board level, and at the board level we have to come up with an understanding. And actually this model also allows the public servants to get the best training, the best business management perspective that the private sector has, because actually they are working together. Again, an example of what the JV of oil and gas companies do to transform and manage a concession. What is very important, and the key message here, was the institutional level of alignment that needs to happen. If we have a vision, if we have a project, it's very important that this project, having involved the public interest, has the government support, and having the government support means having the Ministry of Economy, the Ministry of Transports, but also and always the Ministry of Finance involved. It's very important to have the Court of Auditors involved, so when we know how the project will be approved in terms of legislation and in terms of assembly, the whole thing will fly. And the same way with the local government. And so the whole point is to, how are we going to have local government, central government, and within central government, the Minister of Finance and the Minister of the line ministers involved. I would say that when we are able to present this type of institutional framework, when we know that we have this type of institutional framework, it's very easy to sell the projects to investors. And it's very easy to get the trust from investors coming in. This is an example of what happened. So we had a public partner and a private partner, both investing 19 million in one project. The project had a return of 37 million to the private and to the public sector. But then on top of that, the return on land, it was 54 million, and the returns for the central government taxes and the municipal taxes was still 12 and 28 more. And so the whole point is that land side PPPs that can be developed around airport cities can be very interesting business, not only for the private sector, but also for the private sector. So what this means basically is that we have to work at the project level, at the program level, and at the policy level. And actually, this means that we have to bring in together three levels of decision making. I'm talking about ministers, I'm talking about general managers within the public administration, and then we're talking about project managers. And it's very important that these three levels communicate and they all know what is going on, so that policies are designed for project implementation, and project implementation can influence the way policies are designed. It's very important to also to bring in the OECD blended finance perspective. Again, for trust to be built, most important thing is to have skin in the game. And so skin in the game is basically having capital being put in. And so it's obviously very good when we see public investment, public capital being put in before private capital is asked to be mobilized. And so this is the business design supporting blended finance. And again, we consider that blended finance is aligned with the SDGs. So the roundtable approach, just to finalize, the roundtable approach is basically when we have a vision about transforming the country, about transforming the city, is basically getting around the table a number of people and having and basically trying to get global scope, the involvement of high-level players, having cross-cutting several policy communities and decision-making groups to think laterally and basically to test new ideas, thinking at the highest political and commercial levels. The whole thing is about the roundtable approach by being multi-level, by being multi-sector, transdisciplinary, iterative, interactive. Basically, the whole point is to make sure that the different stakeholders agree with, not only with the objective, but agree with the strategy of transformation, of development. And for this reason, again, investors and lenders will be involved. And that's it for me. I'll be glad to answer any questions. Thank you.
Thank you so much, Mr. Pedro. Later, if we still have enough time, then we can have question and answer. I'm going to introduce to you another speaker for the topic Unlocking Debt Equity Funds. Mr. Rupen Philloura. He is the CEO for Airport Groupe, an aviation consulting firm which optimizes airport operations across the globe. He is also the CEO, founder of AIX, a forecasting software solution which can be applied to any airport and utilized by its stakeholders for resource management and incident notification. Mr. Philloura brings over 2 decades of airport operations expertise with a record of success providing end-to-end leadership for medium to large hub airports in USA. Welcome once again, Mr. Rupen.
Good morning, everyone. Thank you most importantly for your time and being here. I've had the honor to meet some of you already, very diverse group. So I'll make it short and sweet. Let's talk about why are we here today. We're here because we all have a passion for aviation and the future of aviation. So we are here today because as the previous speakers have begun the dialogue, they've provided some information to us and given us some knowledge so we can make some good decisions to decide where we are headed. So we are here to create not only dialogue but action and change, and we are, all of us here in this room, future aviators and decision makers on where aviation goes. All right, so no more introduction. I do some airport consulting. I do software solutions. My background is about 20 plus years in the US managing airports, so staying on the day-to-day operations, safety and security. We sit down with our clients, we strategize, we digitize, and then we optimize to create a lot of efficiency. So I'll touch on a lot of data that already has been discussed, so it'll be some redundant information. So please bear with me. As we know, the most important commodity now is, oil and gas, the energy sector. But equally important now is data. How do we use data? What do we do with data? And what type of decisions we make with data? So just give you some aviation statistics. World population right now, almost 8 billion. In 2018, the global passengers were about 4.4 billion. So if you think about it, a little more than half the population of the world is taken to the skies. What type of taxation it puts onto the infrastructure? How many planes are in the skies? By the mid-2030s to almost 2040, we expect about 14 billion passengers, almost 3 times more. So just take that in and think about it. Speaking, what type of infrastructure do we require? And how soon are we going to require it? As many of my other speakers have mentioned, average growth at about 4.5% is the average growth. Some of the sectors, the next 20 years, to have, very nominal numbers, is Africa at 6%, the Middle East, the United States. So just taking all this information, every day we have 120,000 aircrafts that take off. We need runways, we need terminals, we need infrastructure. Some more aviation statistics. Aviation jobs. Direct jobs, 10.2 million jobs created just from aviation alone. Indirect jobs, it's massive, 65.5 million. It's a huge number. And then we look at the airport revenue model. We have the aeronautical services, we have non-aeronautical services, and the non-operating. As you can see these numbers, and these are sure to change over the next course of 10 years, 20 years. Right now we're showing non-aeronautical revenue, retail, parking. Parking has changed a lot since Uber and all these other services came in. It used to be the largest revenue generator for some of the airports, and that has certainly changed. And this is some great statistics and information to have. So it shows airports with private participation, with some type of private participation worldwide. There's only 14% of these airports. And we have maybe 16 to 17,000 airports worldwide. So 14% of that has some type of private participation. And the amount of global passenger traffic handled by those 14% airports is 41%. Huge, huge numbers. Airports and private investments. So the busiest 100 airports have about 46% of some sort of participation, private participation. We move on to the 500 busiest airports. 38% have some sort of private participation. And then again here, as we mentioned, 41% of that global traffic is going through some sort of private participation airport. So we still have that 59% traffic that is going to change. That is going to change as we bring investments, as we decide where to put our money next into aviation and airports. So there's a huge market share to be had. Some more information. As some of my speakers earlier have mentioned, in Europe, there's 75% of airports have some sort of participation, private and public. We go to Latin America and the Caribbean, 60%. Asia Pacific, 45%. The Middle East, 13%. Africa, 11%. And North America, 1%. And if you look at the US airports, they have about 420 commercial airports. Maybe 4 or 5 have some sort of private participation. And as global traffic rises, you can look at that share. You're looking at the Middle East, you're looking at Africa, you're looking at North America. That's where, especially the Middle East and Africa, is going to have a lot of aviation growth coming up in the next 20 years. And that's the amount of participation, private and public, that we can look at in the future. So types of private investments right now in the airports. As you look at these numbers, we have concession contracts that some of the private companies hold, 41%. Freeholds at 24%. Listed airports at 23%. Management contracts, only 8%. And as discussed before, we were talking about aerotropolises, a region whose infrastructure, land use, and economy are centered to an airport. Initially, airports were built further out of the outskirts of a city, but now airports are being placed at the center of cities and creating a live, work, play, and do business within minutes of an airport. These types of spaces are focused on hosting businesses, retail opportunities, residential and leisure properties, state-of-the-art urban developments, connectivity, modeling themselves as test beds of smart cities. So very important. So airports essentially have become now the center of the economic development of large cities. We see it here in Dubai. We see it at many countries across the world. So another key thing now is airports and technology. We are on the cusp of a lot of technology being implemented to make a passenger journey seamless, to make it as easy as possible. So technology is being used in ever more complex and integral ways across the entire airport. Almost every facet of an airport is having some sort of technology that is continuously sensing and giving you data so you can make some decisions. So is establishing real-time management of airports has always been an ongoing challenge. So with the number of flights and passengers at most airports increasing, precision handling of time, scheduling, and resource management has become ever more critical. So without a blanket of technologies over the airport, it makes it very challenging to monitor the entire airport in true and real time. So my company and some other people, we have started building technologies that actually help the airport management side, creating more efficiency, helping you generate more revenue. AIX, Airport Intelligence Metrics. What we've created is an airport-specific software application that takes all this complex data. There's so much data available, but a lot of people don't know what to do with it. So we've created this software that can transport all this data into user-friendly displays for real-time management, resource planning. We're one of the first in the aviation space to create robotics processing, which is basically, we've taken the Alexa, the bots, and we've plugged it into this data software where you as an executive or a management employee can walk into your office talk to your computer and ask them, hey, what is my traffic for today? How's my day going to be? What's my busiest time? What is the passenger throughput? And we provide all that data in real time. You can talk back and forth, have a conversation. You can send these reports to your director of operations or your police superintendent or whoever else might need it. So we've designed very easy to provide, understand critical data to airport executives for timely decision making and scheduling. This creates a lot of efficiency for your whole team. Some of the things that we do is, as I said, airport consult, we optimize, digitize. We also provide fuel distribution, fuel farm operations and management. So what we've done is build a supply chain of services that we can bring to a lot of airports. So it's like a one-stop shop for your operations and management. In conclusion, we're talking about airports of the future. Airports of the future have already arrived in many cases. There are many airports that are already the future that we are looking forward to implementing a lot of technologies, a lot of processes. So here are some of the points that in conclusion we talk about smart airports. We'll have a layer of sensing technology added to aspects of their operation to monitor the environment in real time. Green spaces, green airports, we touched on that earlier with some of the speakers. Technology to create a seamless travel for passengers and efficiency of in-house staff. Biometrics and security is big. European airports are using it, some Middle Eastern airports are using it. The US is just beginning to implement some of this biometrics. Processes will all get automated to create a lot of efficiency because as we experience such enormous amounts of traffic, airplanes, passengers, the infrastructure gets taxed, your employees gets taxed. So we create more efficiency by automating processes. And of course, we have to build adequate infrastructure with room to grow in multimodal businesses. The airport will start taking in a lot of services to provide and sustain airlines, and of course, charging for that. So a lot of these service offerings are going to go into the airport side. So investing in employees is going to be very critical as the technology changes weekly, monthly. It's critical to retain your employees and train them on the best technology for this ever-evolving landscape for longevity. And on that note, I'd like to end. So my information that I provided is basically some data for you to kind of high-level data that you can take back and see in this market, in this global market, where the next future trend of traffic is going to go and where you should be looking at more investments. So if you have any questions, thank you. Thank you very much. And my team and myself, we are around to have a conversation with anyone. The presentation I'll make available for each one of you to have. Thank you.
The floor is now open for at least 2 or 3 questions before our coffee break for Mr.
Sure.
For both of you. Mr. Pedro is here. For both of them. Yes, please. Any questions?
A question in regards to your data analysis using AI for airports.
Yes.
How are you guys doing that? Integrating AI with the airport functions.
Yes, so what we've done is we are, through our APIs, we are getting this raw data from different companies. So we take that raw data and we have algorithms that we run behind the scenes. And then every airport is unique, we know that. So what we do is we sit down with the airport management and figure out what the flow of traffic is, from curbside to check-in to security and out to the terminals. And we reverse engineer it as well, down to baggage claim. So we come up and develop these metrics. For example, for an airport manager, now you need to know at what time I'm going to have what type of traffic available on the curbs, how many people are coming in. We will be able to provide you that data so you can staff better. We will be able to provide you that data so you can have more security lanes open for security screening. We provide that data for your stakeholders. If I have restaurants at a particular terminal, Terminal 1, I need to know what's the flow of traffic during the day. How should I staff my employees? How long do I keep these concessions open? So we provide you all that data so you can press down on your day-to-day operation and tweak it to you can have the maximum efficiency of your terminal space and also your employees and all the functions that are in place right now.
And has there been a case where airports are monetizing these data flows?
Well, we just launched, we have a pilot program going on in New Orleans right now, airport, so maybe in about 3 to 4 months we'll have better traction and data and statistics on that and what exactly the airports are doing to monetize that. Absolutely. Thank you.
Hi, I have a question for you as well. Just regarding the airports, why do you think there's been such slow shift to privatization of the airports?
I can speak on behalf of the United States.
Sure.
So United States has always been very heavily focused on government-funded, operated management airports. They kind of wait and see what the global trend is and then absorb it from there. So if we look at privatization of airports, it's been going on for at least decades. And the European airports had excellent business models with privatization. Then Asian airports, and now some of the Middle Eastern airports. So as these efficiencies and processes take place, the U.S. is more susceptible to opening their doors. Also, all the infrastructure that was built is from the 40s and 50s. So now they need capital investment to make the best terminals, to make the best, bring in the best technologies. So they have been a little behind the curve, but the airports, as you know, in the U.S. are beginning to go through a renaissance. They are trying to adopt similar models as the European or the Middle Eastern or even Asian airports. Yes, absolutely.
I think one reason for airports to be so attractive to investors is because you can see the asset. You know, when you're talking about infra funds, if you have a highway, you have 200 kilometers of highway or 1,000 kilometers of highway. You don't really know where the highway is. When you have an airport, you see exactly where the airport is. Then you have a revenue stream that is very predictable because you basically have new clients coming in every time. The second point is that a lot of the revenue stream coming for airports come from aircraft. And therefore, again, you can expect the revenue stream without have commercial risk. And so the fact that you have an asset that is very tangible, very localized, good revenue stream, different sorts of revenue stream, makes it very interesting for as a infrastructure asset. The only competition of infrastructure assets, I would say, are power plants. Power plants are competing in terms of infrastructure assets. But I would say for pension funds, we're talking about 30 years down the line, you can predict, and so it's very, very interesting asset.
One last question, please.
Thank you. My name is Rashid. I'm from Oman Aviation Group. I have a question about the airport cities. Infrastructure cost is really high, and if you reflect it into the investment when the investors comes, no investors will put any infrastructure into the ground. So how will you make the model works in this case?
We can speak further afterwards, but basically, as I was suggesting, when we talk about airport, and airport city and the city itself, we are talking about an umbrella of investments. Some of the investments are very tangible, like telecom investments, infrastructure assets, energy infrastructure assets. All these type of assets are very easy to attract investors. The assets that are not easy to attract investors are schools, even hospitals today are fairly easy to attract investment. So the whole point is to look into the city and decompose the city into a group of assets and to understand what type of assets can attract investment, and you can create SPVs for these and create, I would say, commercial economic PPPs for these ones, and to create social PPPs for the other ones. What is very important is that for a city to work and for a city to attract people, people do not only want to have good highways or good power, but they also want to have good schools. And so a blending of the different type of assets is essential to have a good city and airport city.
Thank you so much, Mr. Rupen and Mr. Pedro.